Hello and welcome to another Forex Friday. Let's just jump straight into it.
My man!
Alright, so we're going to start things off with the DXY per usual. And I got the, well, let's see if it shows up, the fire mouse for this crazy shit show of a week we got going. Mostly due to inflation numbers, not going to get too much into it. I'm sure we'll touch on it at some point. But let's just start with talking about this move in the DXY. So we talked about this last week, had the high around 110, retraced down here. You can see with these wicks, there was a lot of liquidity here. Just all these candle closes roughly above this level. And we had the strong reaction right now, back up above the previous range high. I still think that this is in play, potentially. Hard to say, really depends. We'll have to wait and see how things develop with Europe. And I know Japan is considering, or maybe not considering, but they're talking about their concern with foreign exchange rates just because USD JPY went crazy, which I will touch on, obviously. We'll get to that pair. But these are part of the DXY, so those currencies matter. And I think it's definitely possible we still have a retracement down into this demand level. You can actually see on the daily level, now it looks pretty clear. Prior to it was just the 4-hour chart that was showing it off. Where we at? Yeah, so we got this consolidation right in here that led to this impulse. And we still have a decent amount of imbalance here.
Yep.
So I still wouldn't be surprised if we saw, even though after we had this pretty large candle right here, this big move, if this, or maybe even a little bit higher, you could pull liquidity from, actually let's map it out for you. So this is obviously our high, and we got the last green candle. This is a 4-hour chart, remember, last green candle right there makes a good supply zone. Let me get this out of the way. Who cares about Canada's 2-year bond auction?
And we say bye-bye!
Alright, so we could push up into this level, because if we are not going to make a higher high, this is the area to watch right here, where we would maybe see some reaction and then a move down to make a lower low. And I personally would be waiting for something around this level. I suppose you could wait for another higher low based off of this demand, roughly in this area. I would try to look to Euro, USD, and USD JPY for some sort of confluence where you can see them lining up, like say when the DXY gets here, that Euro or USD JPY are also in a similar area of demand, supply, whatever it is. So I would definitely look to that. But these are the levels to watch in the meantime. Just given the strong reaction, I do think this demand is more in play than maybe I would have assumed before, just given that this level in general doesn't offer too much other than these candle wicks right here.
Totally.
But yeah, so I'd be looking to a retracement to 106 and then eventually maybe one more push. I am starting to get to the point where I think that the dollar strength is potentially going to be tapering off. I still think, if I had to guess, base case, again, not financial advice, but my base case is that we will make another high in the DXY at some point in the near medium term future. Obviously, could totally be wrong. This could be the peak, but I'm just sensing that the dollar's gone up so much. I can't imagine it going up like maybe 120. I don't know. Even that might be a little too much, but either way, I still think we got a little bit of gas in the tank. So I'd be eyeing these levels because again, we have this high, this low, this new high. So if we are going to put it in a higher low and continue this large uptrend, it would be at the lowest around this level of demand. So somewhere in this region. But at the same time, I think this lines up really well with the midpoint, which is a frequent retracement level for ranges. They enter a new range, they come back, test the midpoint or whatever, and it lines up with this demand. So you got a little bit of confluence right there. And so yeah, I'd be assuming that off of this level, maybe down here in this level, lining up with this demand, that the DXY would gather some more steam and continue on to that higher high.
Yep.
All right, let's actually touch on the trade weighted index real quick. Just keep it simple. So bounce back and forth and get a better, let me do the line chart. If you bounce back and forth between these two, you can see there is a pretty noticeable difference. Oh, that's my, let me get rid of this. It's confusing. I was like, that doesn't make sense.
You're a fucking idiot.
All right, there we go. That's actual price. Yeah, so you can still see there is a difference between these two. The DXY has shot up more recently, and the dollar trade weighted index has been retracing from its top, hasn't had that same rebound. Now, I'm not going to read too much into this. Just always keep in mind what is the difference. I mean, if not just to like locate where the strength and weakness is in the Forex market, you see that the DXY, which is primarily the Euro and USD JPY, has bounced back and retraced a little bit, almost, moving in on its previous high, whereas the trade weighted index has retraced from that high and hasn't hit a reversal point yet. Now we are, in this area of demand right here, because we had this slight little pullback consolidation before the final impulse, so it's possible we get a rebound here. But anyway, just point that out. I like to always reference the DXY in, through the lens of the trade weighted index and vice versa, because it really does matter.
Totally.
All right, let's transition to Euro USD. Oops. There we go. Okay, none of this line chart. All right. So, as you can see, no surprise to everybody that we have been on a pretty long downtrend. And now, just like the DXY could be losing some steam, I think that Euro USD short trade could also be losing some steam, even though I do think, there isn't a good reason to be in the Euro right now. But the thing is, when any investment, for that matter, starts to look really bad, like nobody wants in it, that could be a time to start looking at it, because it's the, the contrarian trade. Because whenever you're entering a trade, you always have to think, who's the marginal buyer? And if nobody's buying the Euro right now, there's a lot of people that could buy the Euro. So you could be the first one and then, catch the bottom. And again, you don't want to catch falling knives. I get that. It might be better to wait. But at the same time, when everybody's saying like Euro's done, Euro's dead, it might be time to start looking to long the Euro. So, again, not necessarily saying now is the time. That's more of like a macro trend. Maybe we get like a small rebound. What are we on the daily chart? Yeah, so we got, let's just map this out a little bit. So we got low, high, lower low, lower high, lower low, lower high, lower low. So consistent with this structure, we could see a move all the way back up to the 1.03-ish level and then fall down to a new lower low, and that would be consistent with this trend, because this is kind of the previous high that led to this low, and we're still in the process of maybe making another lower high, just because we haven't broken structure below this level right here. So actually I have the line already here. So this right here would be our break of structure, or actually our continuation of structure, but because this is the lower low. Actually, I'll label that. It makes more sense. So we have this short-term swing high right now that could ultimately end up being the high, and then we make a lower low from there. Where's my drawer? Here, let me get this. It's too much on the bottom. Okay. Yeah, so this could ultimately be the lower high, consistent with the structure, and then we head to another lower low, and then we come back and bounce off of some sort of supply level in this region right here to continue that trend. Or this could be let me get back to the auto, go down to the 4 hour. This also could be the short-term bottom, and that's why I have this demand zone mapped out. We did have a pretty big move up. Have to keep in mind though, we didn't even trade above this high right here, so definitely wouldn't be surprised if we just blew right through this to make that lower low, in which case I would be eyeing this level in the future for a return, make that lower low and come back up into this area. But at the same time, this is the real, this is the real level to be watching. Or no. Okay, yeah. Well, previously. What am I saying? So this level right here. This is the high that led to this low. So this is higher conviction, I would say, if price came back into this level for a short. This level, definitely medium conviction, although the fact that this is kind of a high and this didn't break that high, that could be could convince me further to be more willing to take this short from this supply level down. I would probably just target the same lower low right here. And for my bulls out there, if you're interested, now this is definitely the level to watch. Like I said, this is the lower low that would continue this structure. And so that is the base case, just given we are in this bearish trend. So, and then the risk reward for this wouldn't be terrible. Like sometimes it's worth it if you really think the trend could reverse in the medium term, just because if we are going to make a higher high, I mean, this is pretty reasonable entry and risk, and you target this high, right? Break a new high. I mean, 5R trade, you know, you only have to be right, like, what is that? Like maybe 10% of the time for that to be profitable. So, food for thought. Again, this is just if you are kind of convinced that the euro is going to head a little bit higher in the short term. You know, just even if we end up trading to this level right here, it could easily put in a higher low and then break here, put in another higher low, then eventually, you know, finally get to this supply zone and then break down. So yeah, that basically sums up my thoughts on euro in the interim. Maybe I'll drop down to the 15-minute real quick. Yeah, so nothing really crazy, I suppose. In the, I mean, this is the 15-minute time frame. I suppose you could be eyeing this level around here for a higher low on the, you know, a lower time frame, obviously, and then a push, basically bouncing back between this area of supply and this area of demand. So I mean, we're already seeing reactions here, so maybe price comes back in here to put in a higher low and then continues to grab supply again, capture any more excess liquidity from this supply area, and then just basically be more or less range bound, maybe slightly building, you know, higher lows, higher highs, until, I don't know, maybe even breaking this high and grabbing more from this area right here. Hard to say, but these are the levels I would be looking at for. That was a brief short-term time frame overview, but you know, for the euro, or at least recently, I've been more focused on the higher time frames. But definitely, yeah, I don't know, whatever your preference is. Anywho, let's transition. The fuck. All right, what do we got? USD JPY. So this is pretty decent. Now I was surprised because normally USD JPY doesn't really give you too many, at least recently, I should say, hasn't really given me too many trade opportunities. It's more been like a macro slow burn, just complete decimation to the upside. But we had a pretty good trade right here that I took not too long ago. I'll walk you through it, and we kind of potentially have a setup for a similar one. So the trade was this, oh no, this right here. And then I just knew high.
That was easy.
Okay, so let me go down to the 15-minute and show what I saw. So we had this area of demand, right? And why is it demand? I mean, we had this kind of trickle down, I guess a little aggressive right here. Get my drawing tool. So it was a pretty big impulse, retrace, and then continuation down.
That's what she said.
And then we had this large impulse higher, right? Just consecutive green candles. And then we put in this short-term low, kind of a swing low, and another swing low, building up liquidity and leaving an imbalance right here. So that is how we draw our demand zone, or came to that conclusion that this was an area of demand. And as you can see how this drawn out right here, we have a little bit of a liquidity line of relatively equal levels. And that is basically price kind of, you know, puts in these short-term lows and builds up all this liquidity from stops, some sell-side liquidity from stop losses over here.
Right.
I stole my drawing tool. And then eventually it comes back down and busts through this level, grabbing all that liquidity. And I love when it lines up with an area of demand, because it's just a great confluence. So you have it jump down into this level, basically fill all this imbalance, capture any excess liquidity from this area of demand, and then shoot higher. And so the target for this trade was the higher high.
Whoa, that's like fucking mean.
And let me zoom in a little bit. So I mean, this candle was definitely related. It was related to the inflation numbers coming out. I think that's exactly when this happened. And because, you know, USD jumped because inflation came hotter than expected, which means the Fed would be more aggressive. So interest rate differentials would drive that higher. That's kind of the logic behind it.
Totally.
But anyway, it still lined up with the technical. So I think it was still, you know, relevant, because sometimes when you trade FOMC meetings or whatever it is, or, you know, economic reports, it can be a little bit like up in the air. Like, was it my technical indicator, or did I just get lucky that it lined up with some sort of catalyst? And, you know, hard to say. But anyway, I digress. So we had the entry at the top of this last red candle, right? Because this is the last sell candle that led to this impulse. So that's the top of the demand, and then bottom is just the very low. So we entered, or I guess I entered, it wasn't a we, but I entered right there, and then invalidation, pretty clear, just right on the other end of the demand zone. That would be a lower low, break a structure, and enter right here, target the higher high. Pretty easy 5R trade, 5.5. Could have kept going, but unnecessary. This is why you target the high. I suppose you could have been eyeing some level over here, but I personally target higher highs, just because you never know. Sometimes you just get like a little move like that to the higher high and then a drop down. So just playing it safe, you know what I mean? All right, yeah, and so now let's current price action. You know, hindsight's 2020. Although I guess I did take that trade anyway. So we got this move up higher right here, made this higher high, and we're looking for another higher low based off of this area of demand. So same thing, the sell candles right here. Actually, let me get this out of the way. So we got these sell candles right here that led to this huge impulse. So the wick, top of that first one, and then the bottom wick of that second one, and then we have our zone. So basically waiting for price to return back. And what I love, actually, I love to see this, because I want price to build up liquidity, especially with a demand zone nearby. Because what do you have? You have this imbalance right here in between that low and this zone, kind of like how we had this imbalance right here that price broke through and then pushed higher. So I'm looking for something similar in the probably next week, obviously, because today, oh, full disclosure, actually today is Thursday. I'm not going to be in my studio on Friday, tomorrow. So if you see any discrepancies in price, if you're watching this Friday or later, just know that's why. But anyway, so looking for price to fill this imbalance right here in this general area, and you know, dip back down into this demand zone before making another higher high. And that is this order panel. Pretty straightforward. Oops, there's a messy looking chart right now. Oh, yeah. So another 5.5R trade. Pretty decent. Not necessarily going to work out, but you can tell it is almost really a mirror of this previous one right here. So wouldn't be surprised if it did work out, but yeah, food for thought.
My man.
All right, next up we got USD CNH. Okay, let's get to the daily chart. Look at her up. Okay, so like most USD pairs, we've been on a tear, and this actually just jumped a lot higher today. Again, Thursday. Maybe gives it all back tomorrow. But we are going to clear uptrend right here. So we broke out of this range right here into this new range.
Obviously.
And just on the, again, we're on the daily level. So I'm going to map out some quick daily areas of potential demand. Gotta label it so everybody knows. All right, and this is a little bit too big.
That's what she said.
Okay, so 2 hour. All right, so we got these areas of demand, right? And this is the 2 hour chart, right? So this is a 2 hour range, roughly. We dipped or pushed above, came back down to the middle. Again, that happens quite often for ranges. Dip down to the middle, find some area of demand, right? Where is our demand? We had demand right here. These last sell candles that led to this big impulse had imbalance in here. What did price do? Came, filled that imbalance right into this demand, and then pushed higher.
Nice.
And now we have this next impulse that made a higher high, right? So our structure is intact, our bullish structure, because we have this high, this low that led to a new higher high.
Yeah, baby.
So what we're looking for is another higher low, and that could be, I have this level mapped out right here because you see these sell candle, right? That led to this huge impulse, got a lot of imbalance in this area that I would like to see filled. So we get price to come back into this area before a continuation higher. But I also had this blue line right here that you can see mapped out because this is kind of a range. And now supply and demand zones can be tricky because you can base it off of candles. You can base it off of like whole order blocks or ranges, and both can work at different times.
Whoa.
It really depends. Sometimes price does come back in and reacts just to like a range. So actually, if you go up to the 4-hour chart, you can see this is just a huge candle, right? So you could argue that this is the imbalance that really needs to be filled right there, rather than from this demand zone, like, you know, in here, this region. So that's why I mapped out the blue line, because I think that is definitely a point at which price could pivot. That is the, you know, the real imbalance that needs to be filled, this whole area. And the risk to reward is still decent. So 3.5, targeting a new high. The entry is basically at that blue line, and then the stop is right below the lower time frame demand zone. Right, so this is a demand. Oh, let me get this a little bit to the left. All right, previous demand, pushed higher, made new demand, and so if you look at the higher time frame, this little gap right here, this little imbalance, that is this right here, right? So not that price won't fill it, but I think the real imbalance to look at is right here. So that is why I would lean more toward having the entry at this blue line. And like I said, risk 3.5, or risk to reward 3.5, pretty decent. Yeah, straightforward. You guys got it.
Totally.
All right, next up we got NZD/JPY. Okay, where are we? Daily chart. Let's do it. Woo! Okay, so this is another kind of similar to, what was it, the USD/JPY one? So still have a bullish bias, right? Why? That's why.
Whoa. That's like fucking mean.
We had this high, this low, that led to this new higher high, right? Broke above that, so higher high, bullish structure intact. So what are we looking for? We're looking for a higher low. Now that could happen in a number of areas. This being my first area, I'll get into that. But obviously this is the low that led to this high up here.
Nice.
So this area is really an area you should probably watch. Now I don't like how big these candles are. It's a little frustrating when demand zones are that big, but whoops, I think we went down too much. All right, so let's get a lower time frame perspective on this right here. Okay, so no, it's a little messy, not exactly clear. You could base it. I like this candle level right here. I mean, pretty aggressive. Whenever you see these flip-flops, right, just like a huge sell and a huge buy candle, that is a sign that you have a lot of liquidity entering the market, a lot of orders. Lines up with this area right here of demand. Same thing, consolidation, big impulse higher, came back into that level. So this is definitely an area of interest, I would say, potentially as an area of demand. So if we, let's do 4-hour. Okay, so put that out there. And if you want to play it safe, always base your levels or your zones off of the absolute low, because that is your official invalidation level. Now you could base it off of this just because of how big this zone is, but if you want to incorporate like the absolute invalid level, then you really should have the lower low, the actual lower low. So I'm just going to expand that we get an idea of it. So on a very higher time frame perspective, or from a very higher time frame perspective, this is roughly what I would be looking at for NZD/JPY. If it did come back down into this low to push higher, I think this is decent. I mean, 4-hour trade, not bad, but this is again, this would be a very long trade, kind of like a probably several week swing trade if you were doing that. So we'll drop down to the lower time frame. All right, so we got like I said, similar to the USD/JPY pair that we just went over, we have this area of demand. We made a high right here, and then we had these short-term lows, relatively equal lows, equal levels, creating liquidity. So liquidity line. What? And I like this level because I want to see price push through this to bust all that liquidity, get that sell side liquidity to enter the market, and also this lines up well with this area of demand. Now this is also an area of demand. You can see this consolidation, impulse, retracement, and then another impulse. So I mapped out both of them just to play it safe. But you never know which one it's going to be. It really could be any of them, so you got to be prepared. So what I did is I targeted the higher high, right? So if we see price retrace to capture any excess liquidity in this area or this area, we would expect it to continue higher because this is the low, right? Making a higher low, continue higher to a higher high, this area right there. Get rid of that. So that is obviously the target, and this is the invalidation. Again, I'm not really practicing what I preach right now because technically, right, this is the invalidation. You want the full one, but you have to be practical sometimes. And even though that is the absolute low, I think that because these areas look like demand zones, this is probably the low that you could safely base your invalidation level, your stop off of. And so that is what I would do for this. Otherwise, the risk reward doesn't make sense. The trade doesn't make sense. So you kind of have to, balance those things out.
My man.
Okay, so invalidation right here. I like to do like 3 to 4R generally. So you could push this up a little bit. Let's see where 3 is. Yeah, pretty good. So basically almost the top of the zone, and that's still playing with this. Now, if you did feel confident that this is the area of demand that matters most and that you'll probably see a pivot off of or pivot from, then you can bump that stop loss up and safely push your entry up to the actual top of this demand zone. And that's pretty decent. Honestly, this isn't a bad idea because I do think that there's a good chance that this ends up being the demand level off of which price pivots. But yeah, so that is what I'd be looking at for NZD JPY. All right, what do we got up next? Euro AUD. Okay, daily chart. What are we at? Okay, so we got obviously bearish structure. We got high, low, lower high, lower low, lower high, and a lower low. So this is the area that we want to see price enter in, right? Because this is the high or the lower high that led to the lower low. So price continues that structure. This is the area of interest. So this is, again, the daily chart. So this is very much a higher time frame perspective. Invalidation, higher high, entry. Actually, I'll get a little bit closer into that to map out the supply zone for you. And then targeting a lower low, right? Continuing the structure, not going to make a higher high, going to make a lower low. Now, if you go into this, so this is the last daily buy candle, green candle, that led to this large impulse. That was basically the impetus behind this zone. So if we go down to the 1 hour, I don't know if it's as clean, but whoops, where are we? Yeah, so basically it covers this whole, this huge impulse right here. I just did it on the daily chart. You could try to hone in specifically on an area on these lower time frames if you want, but I'm not really that interested. The zone's big enough, and I'd rather play off of this top level rather than get too granular down there. But that is, let me get back to the daily chart. So that is what I'd be looking at for the daily chart. I think that if we can get up to this level, it would be a good shorting opportunity. Not crazy risk to reward, but 365 is pretty decent. And let's drop down to the lower time frames. Actually, do we get anything? Yeah, let's go to 4 hour. Okay, so kind of a pattern we talk about a lot. Got this liquidity line, right? We had this area of demand, impulse higher, came back down, making these higher highs. And this is going to trick retail, right? Because what's going to happen? I mean, obviously, I don't know the future.
You're a fucking idiot.
But I would not be surprised if we bust through these levels into this area right here. Because, you got stop losses like this, retail stops all in these areas right here. So you bust through, capture any liquidity left in this area of demand. Actually, now that I'm looking at it, possibly even, whoops, this area, but it looks like we already kind of got liquidity from there, right? So this area of demand pushed higher, came back in, and then we made a new higher high. So I think this area is definitely something to look at. Actually, what are we on the 4 hour? Let me tighten this up a little bit. What am I basing this off of? Let's do the sell candles. All right, so maybe look at this level. Actually, let's drop down even more. Where are we at? Where are we going? Yeah, so it looks like we already kind of touched it a little bit, potentially, with this. Maybe even base it off of this whole area right here. Yeah, so it looks like we already grabbed it a little bit of liquidity with this wick right here, and then pushed higher to make another higher high. So not necessarily an untouched zone, but I still think, just given these ascending highs of higher lows, that we could bust through that into this level of demand right here. And you can always push this down, tighten a little bit, basically right where that, kind of what this low is. And so we're already a 5R trade. If you're basing it off of this tiny zone, maybe even more, you could, let's see. There we go. Yeah, you still get a 3, basing it off of this low. So not bad. And if you're wanting more, you can always just push this down a little bit more. I usually sacrifice the entry rather than the invalidation level. All right, what are we, 1 hour? Yeah, let's go back to the 4 hour. So that is the first area. And then we also have this area of demand. So we got all these notifications.
Little bitch.
All right, so like I said, higher time frame, I am kind of targeting this area, so I wouldn't be opposed to looking for buys at any of these levels. This is the low, right? If we make a lower low, then obviously everything's invalidated. But we had this big impulse higher that led to this area demand that we have not come back into, right? So if this level doesn't prove to be the area that leads us to the higher time frame supply zone, then I could see price coming back into this area that has a little bit of, I mean, maybe imbalance, hard to say, it's a little bit messier, but this, this zone right here has already been tested. This zone hasn't really, so price just kind of shot up, never returned. So wouldn't be surprised if we saw it come back into this level before ultimately heading into this higher time frame supply level where you short. Yeah, that's pretty much, I guess, it. Nothing too crazy. Let's go ahead and transition to the next one. So what do we got? Euro, GBP. Okay, so this is a good one. This is another trade that I actually am in right now. Oh, never mind. I think I don't know, I'll have to double check. But yeah, so here we go. We got, what are we on, the 4 hour? Yeah, we'll just leave it right here. So this is a really pretty chart example. It doesn't get much cleaner than this. And full disclosure, I got really lucky on this entry. I mean, it was like pretty... I was surprised I got in, because sometimes you're like, just luck of the draw. You'll miss it by like a pip or something. But I luckily got into this with literally no drawdown. It was one of the luckiest trades probably. But so what do we see here? We have this area of demand right here. Drew that out. And again, just basing it off of, I guess technically, there we go, this low. So this last sell candle that led to the impulse. We made a relatively equal lows above this level. So we had this imbalance that was never filled, and that was what I was waiting for. But price continued, and we made this level of demand, right? Pushed a little bit higher, had a red candle right here, and a huge impulse that ultimately led to this high. And we did the same thing. We created short-term lows like this, kind of a descending liquidity line. And we had, I mean, based off of this level, all of this imbalance that needed to be filled. And what happened? Price dropped down pretty much perfectly. I mean, it really barely, you can see like, it basically is perfectly in line with the top of the zone. So it tells you a lot of liquidity was left there, because then we just saw this straight move up, right? So pretty perfect trade, to be honest, like textbook. Now, I don't have anything to offer you, unfortunately, going forward, just because it is in kind of no man's land. I still think, given that this isn't an uptrend, we're probably going to make a higher high at some point. Who knows where that is? And then we'll see a retracement back into maybe this area right here, where we have more imbalance, or possibly based off of this level right there. Oops. So that is what I'd be looking at going forward. Again, assuming that this is going to make a higher high, bust above this top blue line right there. And at some point, I don't think we have, do we have, I guess we do, where is this? This is the high? I already broke it. Yeah, no, you could probably go back further into price action, find a level, but I think if it's that far back, it's probably not as reliable. But at some point, if we make a higher high, we'll presumably pivot, come back into maybe this level right here. You got, you know, all these sell orders that led to this impulse. You know, potentially this is going to be the imbalance that needs to be filled. Or we could come back down into this level. Or maybe even higher time frame, we come all the way back down into this level. Who knows? I'll be watching it for sure. But those are the areas of interest. And at minimum, I just wanted to show this idea, right? Because this is a really textbook picture. I actually might want to take a picture of this just for future reference, just because you can, it's a good like model, I guess, for this type of trade, you know, basing off the demand, the liquidity line, especially because it's back to back. I mean, technically didn't enter into this level, but still just pretty chart. So you can just see this idea, right? Pretty basic. Demand, impulse, built up short-term liquidity with these higher lows, then and leaving this imbalance right here. Come back in, fill that imbalance, grab liquidity from the demand, rocket higher to the higher high. All right, that does it for Euro GBP. Let's transition to Euro CNH. What we got? Okay, so I did not take this trade, even though I had the pretty much similar setup. Probably would have been working out, I mean, clearly. But here we go. Yeah, so we are in a downtrend, but this is a counter trend, short-term bullish. So obviously going down.
That's what she said.
My man. All right, so we had this area of supply. Price came down, made this low, pushed back into this level right here, this area of supply. Now I base it off of this one, even though it's a sell candle, just because it, you know, dojis I consider really any color, and this is basically a doji. So I just consider whatever color suits my preference, really.
Totally.
Anyway, so we got price coming back into that level. Whoops. Making a lower high, and then continuing the trend to make a lower low. Now what we're looking for is another lower high, possibly off of, you could base it off of, again, always the absolute high. So like this zone that I have drawn out, you could base it off of there to be absolutely safe, but I am doing it off of this, kind of like a zone shift. Basically, you had this high put in, kind of minor retracement, consolidation, and then we have this green candle, right? These last buying candles that led to the next impulse and ultimately that low. So this is the area I would be looking higher time frame for price to retrace to. At that point, I would kind of be done looking for short-term longs, and that's basically what this is. So base it off of this zone. It's a pretty decent risk to reward. You got yeah, so a little over 4. Woo! So again, that's higher time frame, but let's get down to the lower time frames. Okay. So we got a similar thing to what we've been talking about. This demand level. You can even tighten this. Whoa. You can even tighten this a little bit, because this is the imbalance, right? We have this right here that we would like to see filled. So liquidity line, push higher right here. So I don't know. We could see a retracement down onto this level, and I would still potentially be bullish short term, just until we get to this higher time frame supply up in here, right? So drop down into this level and then up into this higher time frame supply. Definitely think that's possible, but given this reaction we're seeing already, it looks like this area that I mapped out before really could have been the demand. And let me drop down even further. Oh my God, what is this? So how did I get this level? I guess you could have made this a little bigger. So I was basing it off of, I mean, always the low of this this red candle that was leading the impulse higher, and then just kept the imbalance. So kind of like a fair value gap, right? So you have this area of imbalance, and we had these short-term lows that left that imbalance still intact. made a higher high, and now we're retracing. Came back perfectly into this level, had a little bit of a push, came back again, made a higher low, so showing that this level is pretty strong. And now we made another higher high short term. So it definitely seems as if this is the level, and we might be headed to that to this area of supply from here, like as in this is the low until we get to here. Now obviously I don't fucking know, just saying.
You're a fucking idiot.
But in the meantime, you want to be looking for I mean, I would love to see price from here make that higher high, because then that would really give me the confidence to look for that higher low and one more higher high. And that level is potentially going to be, so we got all these sell candles, right? And this is the 4-hour chart. So all these sell candles, basically base it off of that. Here, let me get this out of the way. And okay, so this is old news. So I would love to see price push a little higher, make a higher high somewhere up here, and then come back into this level, especially if this move continues fairly aggressively. Now we might see some sort of push, consolidation here, and then a push higher, in which case, let me get some of it. We got a squid fucked another squid. So we got maybe some consolidation right here, and then a push higher. So this area, if that did happen, if it did play out like that, could be the area of demand you'd be looking for. So you get like a retracement back into this level, and then a continuation. We'll have to see how price develops, obviously. But until then, I would be eyeing this level after that higher high for price to come back in, and then push higher to another higher high. But ultimately, I am watching this zone right here, because I think even though we are a higher time frame bearish, we have this counter trend, uptrend, right? We're making higher highs and higher lows up until this level. This is what where I'll be looking to potentially short, just because I think that's just the level to watch. You got this high right here, so you guys technically you could base this zone, like I mentioned earlier, off of this. That does complicate things, just because I mean, look how big that fucking zone is. It's stupid.
Ain't nobody got time for that.
But if you did really want to play off of that like pure invalidation level, right? So this right here, not going to make a higher high, and you just move back your entry until you get the appropriate risk to reward you want. So 3 is not terrible, and you're kind of still in this lower end of the zone, but you can just move it wherever you want. The halfway point is usually a good reference. 5-hour trade, pretty good, but you know, do whatever you want. Pick your own poison. You know what I'm saying?
Yep.
All right, so let's transition. I think we got this one figured out. So Euro NZD. Okay, what do we got? Daily chart. So again, higher time frame, bearish, going down. And so we have, you know, high, low, high, low. How to break a structure, right, above this high, but we made a lower low. So continued this bearish structure, right? And we put in another higher low, or a higher high, or wait, lower high.
You're a fucking idiot.
Can I have more coffee? All right, so higher or lower high. I'm getting it, I swear. And we put in this higher low, right? Again, this is counter trend, but we would assume to keep, unless we're breaking structure of this higher time frame trend, that we won't trade above this level, above the top end of that supply zone. So let's zoom in right here. Now this is the daily chart. We'll go down to the 4-hour, get a better idea. So this is a little messy. Honestly, I don't really like this area of supply. Actually, is that even the one I'm interested in? Or is it this one? Oh yeah, it's this one. Okay, so a little messy, honestly, not the biggest fan, but so the high is easy, right? This is the top of the zone, just pure invalidation level, and you could base it off of this previous area of demand, right? So you got this demand You can see this sell candle that led to that high, and then we came back into the demand and blew through it. So that demand, you could say, turns into supply if price retraces. And sometimes what I like to do, actually, is I have these large zones right here, and then I will do a smaller zone that kind of gives me a, I don't know, just levels to my, you know, like when I'm looking at the chart, I can see there's levels to my different zones. And I'll even make this, I'll turn it into a maybe zone. Right, so you have this larger zone, and then you have this little one that can maybe give you a little bit more context if price does return. And it looks like we're getting close, and we almost got pretty, yeah, actually, depending on how you draw this one, I mean, I suppose you could base it off of this level, in which case price did come back into it perfectly and then came back down. So I would be eyeing both these levels, just because maybe this is the high, and that this will react and put in a lower high. But I still think that this level is in play, higher time frame, so don't necessarily trust this so much. If you want to do 2 trades, you could do like half exposure on this one and then the other half on this one, just to kind of play both, but without risking too much. I don't know. Do what you want to do in the end of the day, obviously. Let me get this over. Yeah, so we got these areas of interest. This area first, right? Potentially this is the high, so we could see price come back into this region and then move back down. Even if it's going to ultimately make another higher low, like in this area of demand, still would be a good trade, right?
Yep.
Just keep that in mind. Always keep in mind the different lower time frame demand zones, whatever. Even if you're higher time frame bearish, just because you can have counter trends that really rip your face off, even though it's obviously a bearish trend overall.
Totally.
Anywho, so where are we at? Yeah, so I would be looking at this level right here, and anywhere in it. Like I said, you can kind of adjust your entry accordingly, depending on your risk tolerance or just what you think. You know, take a deeper dive into this. You're like, oh, I like this area right here. You know, include this. Maybe this is your zone, anywhere in there. But yeah, I would be looking for some sort of retracement from here or anywhere in this region and then down. And then you could be looking at these areas of demand potentially. So I like this one more just because it has a big imbalance right here, right? That hasn't been filled. So I would like to see price come back into this area of demand, potentially putting in that higher low and then continuing higher, unless it got up into this level. So let me get rid of some of this nonsense. And I think this is actually like a pretty important point that I should mention. So if price, let me get rid of this last one. Get this fucking shit out of here. Okay, so if price bounced off of this level, I might still be willing to take buys at this level, because I think I would still think there's a good chance that price needs to make another higher high to pull the rest of like whatever leftover liquidity is in this actual supply zone, because this one's kind of like up in the air, and I think that could be a short-term supply zone, right? That leads to that higher low. But if price went from here straight into this level and then came back down, I'd be less willing to take that, because higher time frame, we already put that higher or lower high in, and so I would be assuming that we would be headed to that lower low, not like a bounce from there to higher. Obviously that could happen, but that is what I would be. That's what's going through my head right now.
Right.
Okay, so let's transition. GBP USD. Okay, we're on the 4-hour chart. So again, bearish, higher time frame structure, head down. We got high, low, lower high, lower low, lower high, and we're kind of in the midst of making potentially that lower low, right? So keep this level in mind. What is this, like 1.14? And because if we break through that, that's our lower low, and then I would definitely be looking for some sort of retracement into this area of supply. Now go down a little bit more, so you can see I actually had this level mapped out. Didn't take this trade just because I don't usually trust these levels as much or enough, but still, for learning purposes, I'm going to give you an idea of what happened here, or what I was thinking. So we had this this low put in, right, and we pushed higher, had some consolidation, and then we had a sizable push up, right? So this is a big green candle, obviously, and we had the short-term lows right in this area right there. And that left this imbalance, right? So this is our area of demand, but price made that high and just blew through the demand.
And we say bye-bye.
So when that happens, you can think of this demand zone as flipping to supply.
Whoa.
And what happened? We blew through the demand zone and we came back into this level pretty perfectly and then continued lower to make another lower low. Now, I had this here targeting the actual lower low, not this short-term one, although, depending on your time preference, that would have been maybe the trade to do. So you enter here, you target this lower low, right, based off of this level, and it gets a little harder to get the appropriate risk to reward with that. I guess what you could have done is, say you base it off of this, which makes it pretty hard. I don't know if you really would have got in on this trade. It doesn't matter. You get the idea though, right? But I had this for reference up here, targeting the lower low because we are bearish, right? So if this was the high, I'm assuming we're going to make a lower low, target the previous low. Makes sense.
Yep.
But I also have this area of demand mapped out. Actually, go down to the 1 hour, show it off. Is that what I have? Maybe 30 minutes. Yeah, it doesn't really matter. Doesn't really matter. Let me go back to the 1 hour. I'll just stick with the, where the fuck am I? Sometimes Trading View has a mind of its own, I swear. Alright, yeah, so you can base it off of, we'll just base it off of this this candle right here, right? This last red candle. And you could say we do have a little bit of imbalance to fill here. Not much, so conviction tentative at best. But this is the low, right? So if we were going to continue a counter trend, right? Because honestly, I think we could trade, even though this low led to this high. I think it's totally possible that we, am I drawing to? Yeah, that we maybe bounce off of this demand, go all the way up into this supply, and then make another lower low. That could totally happen. But if you think that there is going to be a counter trend, this is the demand zone that price would probably bounce off of, right? So go here, and you can even just target like this level, not necessarily that high. I think that would be probably more appropriate, kind of like what this is right here, right? So entry right there, invalidation, lower low, and just targeting this previous high. Not a great risk reward. I definitely won't be taking this trade. Not that it's not necessarily a good idea, but I personally don't like it. Anyway, oops, I keep popping up. But yeah, this area of supply, I would love to see price come in here. I'd be more willing to short in this area, especially given this huge impulse, because we got a lot of imbalance right here that needs to be filled. Got so many. All right, enough of that. So yeah, pretty much just looking at this level up in here in the 1.16 region. But that pretty much does it. Let's transition to the next pair. Okay, so we got USD CAD. All right, it's another pretty good, like sexy looking chart. You know what I mean? Get to the 4 hour, a little bit better. Okay, so actually we'll start with the daily. We'll do top down.
Yeah, baby.
So you can see we are in a hard to say. This is a little trickier. We do, let's see, what is this? This is a high, a little lower, a lower low off of this level, but not this one. Yeah, I know you get to call this more of a range than anything, but we're still in a, regardless of whatever the hell that nonsense is, we are in an uptrend in the, like in the daily, from the daily perspective. Right, and you have this basic channel, right? And I don't necessarily rely on channels that much. I don't think it's like, it's kind of like a retail thing, like, oh, it's at the bottom, but sometimes it does work. You just have to be, I would use it more as a confluence. So if you see price get up to this, like top of the blue, you know, maybe don't be looking for buys. Maybe like if you see something lined up for a sell, that is a confluence, right? To take that short. And conversely, if you see price get down into the the lower area of this range and it lines up with a demand zone like this, that might be a good opportunity to buy. You know, use it as a confluence, not a actual reason to trade. But yeah, so I drew this this range out, and then I have these areas of supply that I think is very possible we ultimately trade into, right? Because this is the high. This is the actual high. So if you want to, again, base it off of like the true invalidation level, you got this zone basically, and figure that out. So it's the daily chart, this green candle right here to the actual high, and then we also had this kind of potential zone shift, right? So we came back down here, consolidated for a while. I mean, this is several weeks right here, and then we had an impulse lower. So you could say this is the new supply zone that we'd want to see price come into. Either way, we have a long way to go upward. And now let's drop down to the shorter time frames or lower time frames. All right, so this is that demand, I believe, right? Yeah, so this is the major demand. Lines up well with that channel, higher time frame. And this is a pretty clear area of demand. You have this consolidation, huge impulse. We made short-term low right here, never filled all this imbalance, right? So that's kind of the logic, right? Got a good demand zone, higher time frame to look for. If price came all the way down, would definitely be willing to take buys in that region. But shorter time frame, you can see we have this demand level right here, right? Sell candles led to this impulse, had imbalance right here a little bit, and what do we see? We pushed higher, made a higher high, came back in, busted these levels, and dipped perfectly into here. Pretty textbook. And we made that higher high. So I love that. Bullish structure still intact. And so what are we looking for? Basically just a repeat, right? We have actually tighten this up. I think I based it off of that. Yeah, we'll do it off these candles. So you could base it off of this. You could also potentially base it off of this sell candle. I would be eyeing both, but I think the risk to reward for this one wouldn't be good enough unless this high makes a a lot more, or has a lot more room to go. Because if we made the new high, this new higher high way up here, then the next high would obviously be higher than that, so you can expand your take profit a little bit, wherever that ends up being, and then you could get away with pushing this higher, maybe up to this level. But in the meantime, not really, in my opinion, a good risk to reward opportunity. So I wouldn't be. Let me get this back down. Yeah, so I probably wouldn't be taking buys off at this level, but I would watch it at the very least, just because we have, maybe if we go up to the 8 hour, it even becomes more clear. Yeah, because you could say that this is really the imbalance right here. This general area. So that is what I'd be looking for. Just kind of a repeat of this. Even basing it off of this level. Really good risk to reward. Basically 5-hour trade. And that's assuming that we don't even make an actual continued higher high from here, because again, it could easily push up to like this level. All right, but yeah, looking for retracement into here, grab any excess liquidity, putting in that an additional higher low, and then pushing up. But at the same time, I think if we did that, maybe from here we break trend and we come all the way back down eventually into this level. So short term would be looking for buys here, but then maybe somewhere closer to this channel high, I'd be looking for sells down into this demand here, and then ultimately a move up into at least this level. Could be a very long time if it ever gets there, not necessarily going to, but that is the area of supply that I think I'd be looking at. So that pretty much wraps that up.
Nice.
Let's transition to, what do we got next? Euro JPY. Okay, well, we're on the 3-day. Okay, so, and again, uptrend. Always start off higher time frame. What's your perspective? Where are you headed? You're headed up. There's a clear uptrend, and we just recently made a higher high. So this is the previous high, busted through it, made a higher high, and we're retracing now a little bit, but that means bullet structure intact. So we had low, high, higher low, higher high, higher, I think it's hard to say, I'll move that a little bit, higher low right there, and another higher high. Woo! Yeah, so that's literally the wick right there. Yeah, so we got go down to the 2 hour. I don't think I mapped out this previous area of demand. Looks a little messy. Honestly, I probably would have based it off of this level around here. Let's see if that lines up. I'm gonna embarrass myself right now. Yeah, close enough, I guess. Yeah, fucked it up. And again, this is why you usually want to base it off of the actual low, right? So hard to say. This is a messy one. It's not always clear supplies levels. Maybe if go on a higher time frame, it's a little more obvious. Yeah, I don't know. Still a little messy. Maybe you could base it off of these last sell candles that led to this impulse, in which case that would have worked out, right? But we put in that higher low, and now we've made a higher high. So now we're looking for another area of demand based off of this higher low that led to that high.
Totally.
So this is what 4 hour chart. Again, a little messy, not like clear candles to go off of. Let's switch our time frame. Yeah, I think this is decent. I'd probably just be looking at this because we got this doji right here, whatever, ignore that. And then we got these sell candles that led to that buy candle, and we built up a short-term low in liquidity, have an imbalance in this region that we would like to see filled. And got this confluence right here, this liquidity line, these equal lows that are, you know, keeping this imbalance alive. And then we just pushed higher to that higher high, pretty aggressive. So I would, this is definitely going to be a while before it gets there, presumably, but a push down into that area of demand, you know, this low, this higher low, so make another higher low around this area, and then continue to another higher high. But at the same time, I think this is the next area, and definitely possible to bounce off of this area in here, this middle-ish area, because this is kind of a far drop. Not that it won't happen, but you want to have a backup, especially because that's going to take probably a long time to develop, if at all. So we get a retracement potentially into this area of demand, right? So we have these sell candles, this kind of range a little bit right here, and then we consolidated right at the top of that and then pushed higher to make that high. So this is the area, the second area I would be looking at for a potential buy, and a pretty large zone, at least relative to the take profit and stop. So I think I based it off of you know, playing it safe. So this absolute low right there that led to the high, right? So you could base that right there. See, invalidation, just beyond it, target the higher high, and you can even push this up a little bit if you wanted to go all the way to 3. Not too bad, right?
Yep.
I'd probably push it down towards the midpoint, personally, you know, get around that 5-hour trade, so something like that, and then just looking for another higher high. So the structure is intact. We just have to find where the higher low is, and we know where the higher high is going to be. If it makes a higher high, it's going to be past this, so that's the target. And yeah, so this level right around here, that lines up well with this imbalance and the short-term lows that created liquidity. So that is why I would be eyeing this. And then this is just kind of like a second potential, but still definitely possible we see the pivot off of this to the next higher high.
Right.
All right, final pair.
Whoa.
We got GBP and CAD. All right, is that what it is? Okay, so this is, we'll go to the daily chart. This is an ugly chart. I really don't like it. It looks gross.
Come on, man.
This doesn't look exciting, you know? Okay, so we got this range right here. Definitely could return to this range. So let's map it out real quick. Right, so we could come back into this range, something to the effect of, you know, bump into this area, fill like potentially this imbalance right here. So I'll actually map that out as a little maybe zone. And I just, mostly because you got a lot of liquidity clearly because of all these wicks, right? And it lines up with the range low, so price would, oops, let me get this out of the way. Yeah, so I wouldn't be surprised if we saw price come back into this right here, retest that range, confirm it's ready to continue this trend, and then push to a lower low Actually, let me get all these mapped out. All right. Yeah, so this is higher time frame. Would I potentially be looking at a return back into this previous range, maybe even to the midpoint? What I like about this midpoint area is it lines up well with this area of supply. Right? So we got this area of supply pretty clear just because we have this consolidation, these green candles. And you can maybe even tighten this because this is the daily, so you could tighten it to this level. But, you know, maybe just play it safe and base it off of that green candle as well. But we have this impulse, and you could argue that we have some imbalance in here that needs to be filled. Yeah. And so I wouldn't put it past price to go all the way up here. Again, I would be eyeing this level, not a clear really supply. You can tell there's a lot of liquidity, like I said, and it lines up well with the range low. So I think it's an area of interest. But you also want to be keeping this supply zone in mind, because easily could come up into here and then continue that trend to make a lower low. But let's drop down to a lower time frame. So we got the hourly chart. That's a nice little squiggly. That's cool. Okay, so yeah, the fact that these are they're basically perfectly equal lows definitely leads me to believe that price will be coming down to break that. You know, you build up liquidity and you bust it. So I would be eyeing that. But in the meantime, we had this area of interest. So that was a little messy, I guess. You could have easily based your zone off of, off of like this candle, and then you would have got stopped out. Definitely could have happened. It's kind of the unfortunate reality of like messy supply and demand zones. Doesn't always work out, but could base it off of this low, in which case you'd be fine, but then you got this huge range. So not exactly a convincing place for me to take buys, but you can tell we have been making, we got the low, got a high, got a higher low, got a higher high, and this potentially is the higher low, right? So somewhere in this region lining up with this messy ass area of demand. And I would be watching because I think, again, this is too messy. I'm not convinced about taking a trade, but I would be watching this level, because if we put in that higher low in this area and then push up here to make a higher high, I would actually then probably be looking for a sell. I guess we already touched this area of supply, so it's possible that we just bust down from here and eventually make that lower low. What is this, GBP CAD? Yeah, I don't think I have any macro bias on this. But at the same time, I still do think that we could be trading higher time frame up in this region. So especially just looking at this right now, we have this kind of like liquidity line a little bit. So kind of these equal levels, a lot of liquidity built up, and that lines up with this lower time frame area of supply right here. As you can see, I'm doing this in real time. I didn't really go over this last chart for some reason.
My man!
So lines up pretty well with this supply zone, right? So you could fill this imbalance, and again, that lines up with a lot of different levels, right? So we had this kind of range low, and on the daily chart, this was all wick, right? So this, a lot of liquidity entering the market, and we have this liquidity line right here that we would, you know, maybe assume price is going to bust through to grab that buy side liquidity from retail stops,
Little bitch.
and fill this imbalance right here. This little imbalance right there that lines up with this. So I would, here, we'll do this as a maybe zone because it's not quite that convincing. Right, so I would be mostly eyeing this area of supply, and then if that doesn't work, you know, if it keeps going, then this area right here for higher time frame shorting opportunities. So let me get this. Yeah, so I would do something like that, and just given how good of a risk to reward this trade is, you can even make it a little bit more. I'd probably be willing to just roll the dice and take that one, and then if I get stopped out, just try again. Maybe closer. I'd probably line it up just with the midpoint, you know, play it safe, especially if I got burned on this one. I'd want a more generous entry. But same target, the lower low, And yeah, so something like that. I mean, if you really want, you can definitely move it down, but that's what I'd be looking at if this one fell through. But you know, we got some time for that, so just in the meantime, wait to see if we can break above this high. Whoops. Because that is definitely a sign that, here, actually, I'll label that one too. Yeah, so if we break above this high, that's definitely short-term bullish, right? I mean, continuation of these higher highs, higher lows. So we get up to, this is a messy looking chart. There we go. Okay. Yeah, so we could break above this high. I would like to see that. A push from here above this level. Because if we break this level right here, make a higher high, I would then be looking for a pullback into a new level of demand. You know, somewhere maybe in this region right here. And then a price pivots to make a higher high, eventually trading into like this region right here where we have the higher time frame shorting opportunity.
Nice.
So that is what I'd be looking at. I definitely do want to see a higher high put in before I'd be looking too long in some sort of demand level, because if price, say price goes something like this and just gets into this level, definitely could still see a new higher low put in, but I just don't like that it wouldn't be busting past this high, because that draws into question the structure. Because even though we have this counter trend, if it breaks this, it shows a higher time frame, or a slightly higher time frame counter trend rather than this like slightly lower one. So you know, we break above here, then my conviction for price trading into here increases naturally.
Totally.
But yeah, that's basically what I'd be looking for. Just be eyeing to see if this continues higher, especially breaking above this high. So this high, then maybe look for longs. If it doesn't break above this, everything's invalidated. Wouldn't be looking for any longs. But even if it just trades above that one and not above this one, tentatively, you could still definitely take buys off of this level. But ideally, I would like to see it trade above this high, and then I'd be much more convinced to take some sort of long in whatever area demand forms. Right?
Yep.
All right. Well, unfortunately, that is all I have for you today. But as always, stay happy, humble, and most importantly, solvent. And I'll catch you all next week.
And we say bye-bye.